Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a great weekend. We're going to kick off with a quick review of the key events, first of all from last week and also heading into the next couple of weeks. There isn't too much going on in the next couple of weeks, so we do have a fairly clear run in terms of the markets. We're then going to look at the relative currency analysis, so we're going to look at the scorecards for the coming week. And when we look at the scorecards, there are significant signals flashing in the scorecards, which are suggesting that last week's 3 interest rate decisions and non-farm payrolls week was potentially a pivotal week for 2022. And so when we look at the scorecards, we really need to pay attention not only to what it's telling us heading into next week, but also what it's suggesting in the bigger picture for what is coming this year. Once we've done that, we'll look at the individual currencies in the futures markets just to match up the individual currencies with the scorecards before moving on to the currency pairs themselves to identify the best markets and opportunities coming up for the week ahead. And as always, once we've done that, we'll finish off with stocks, gold, silver, and Bitcoin. And it does now look like the bottom is in for Bitcoin. So with that said, let's get into today's video. So to start with, just a couple of things to take away from the economic calendar. Last week, we did have an interest rate decision out of Australia. We didn't see the raising of interest rates. We also had an interest rate decision out of the UK where we saw interest rates being raised from 0.25% to 0.5%. We also had a third interest rate decision out of the EU where they maintained their 0% interest rate. And finally, we had some employment data out of the US and out of Canada. Now, the employment data out of the US was mixed. We did have the unemployment rate going up, but we also had a better than forecast jobs number here on non-farm payrolls. However, something important to note was the Canadian employment data. I mean, pretty disastrous, minus 200,000, and the unemployment rate jumping from 5.9 to 6.5%. So this is something to note because although we're seeing an increase in the oil price, the poor economic performance out of Canada is actually weighing on the Canadian dollar. And this is why we're not seeing the Canadian dollar strengthening in line with the recent rally in crude oil. So when we look at the scorecards, this is really something we need to be paying attention to when we're looking to go long or short the currencies. Apart from that, you can see if we head over to the upcoming week, we really do not have anything we need to pay attention to. We have some CPI data on Thursday, which can cause volatility, but not something we really need to plan around. And if we go to the following week, as we usually just have a glance 2 weeks ahead, you can see again, because we've pretty much had the interest rate decisions, we also had the Fed and FOMC, not this week just gone, but the week before. You can see there's not really too much we need to plan around over the next couple of weeks, so we can pretty much take the currencies as they come in the scorecards. Okay, so let's have a look at the scorecards heading into next week, and you can see, I mean, look at this. This is truly significant. This is not business as usual. There was a sea change almost last week in the scoring systems. It hasn't yet fed through into the currencies. When we go and look at the dollar index, for example, we're still technically structured to the upside, but the scorecards are telling us in advance that we could be seeing a top in the dollar index. And if that is the case, if we are seeing a top in the dollar index, that has quite substantial implications, not just for the currency markets, but also for the stock market. Okay, so let's unpack this a little bit and see what we're being told here. Well, the first thing to note is the massive gaining strength of the euro. We went from a -2 before last week to a +5 net change up to a rating of 3. So we went from a bearish bias, we had the interest rate decision, this is very often what interest rate decisions and press conferences can do, to a strong bullish bias in the scoring system in the space of a week. That's almost unprecedented. You don't usually see net change of +5. So there was a big gain. That's the first warning sign that we could be seeing a top in the DXY here. Why? Because the euro makes up 57% of the DXY. So if the euro is gaining strength, you're going to see that take away from the dollar and you're going to start to see the dollar weakening. You're not going to see the US dollar and the euro both strengthening for long periods of time together or both weakening for long periods of time together. So that's really the first warning sign that we're facing a top here in the dollar index. The second warning sign is the dollar itself. We went from a rating of +3 to +2. So we still have some strength in the dollar, but you can see the direction of travel now is that the dollar is weakening. And again, that is coming from the strengthening we saw in the euro last week. And the third sign we could be seeing a top here in the dollar index, and I've been thinking about this for a couple of weeks, is the New Zealand coming off the lows. And for some reason, I've lost the labeling down here. This should say NZD, just as it does over here, New Zealand dollar. And we're seeing the New Zealand dollar coming off the lows of -4 to -3. Now, why is this significant? Because on the 21st of January, we saw the New Zealand scoring -4, which was the lowest you could possibly score in the scoring system, and it suggests that a near-term bottom is coming in New Zealand. If we get +4, suggests a near-term top is coming roughly as a guide in the next 4 weeks. And if we have a -4 rating, it suggests a bottom is coming in that currency within the next 4 weeks. And we were sitting at a score of -4 for the last 2 weeks. It was the 22nd of January that we did the weekly Forex forecast, which showed the New Zealand dollar at -4. We were at -4 for 2 weeks, and now we have a strengthening coming off the bottom of that -4 score. That's the third indication here that we may be seeing a top in the dollar index. Why? Because if the New Zealand dollar is going to bottom, you would expect conversely the US dollar to also top out. Alongside the Aussie dollar, the New Zealand dollar tends to be the most exposed to the US dollar. So if the US dollar is very strong, the Aussie dollar and New Zealand dollar will be, generally speaking, the two weakest currencies against it. If the New Zealand dollar or the Aussie dollar is very strong, you would expect to see the US dollar weak. And there is even a fourth sign here that we could be seeing a top in the dollar index and a return to risk appetite, a risk on mentality. And what is that? Well, we're seeing money come out of the safe haven asset of the Japanese yen and the Swiss franc and the US dollar all in 1 week. So we really are seeing multiple warning signs here that last week has the potential to be a top in the DXY, and that actually would set the tone for the entire 2022, because a big sell-off in the dollar is going to see the recent lows in the stock market, which I tweeted about on the 24th, which was actually the day of the low of the Nasdaq. It's going to see those lows holding, and as the dollar comes down, we're going to see a rally in the stock market, and you're also going to see Bitcoin rallying as well. So if we really are seeing a top in the dollar index here, this has quite a lot of implications for 2022. But as I said earlier, this has not yet fed through into the price, into the technical analysis, because when we look at the dollar index, it's still structured to the upside. However, everything we've just gone through here in the scoring system is suggesting that may change into next week and in the following weeks. So aside from what the scorecards are telling us in the bigger picture here, let's have a look at specifically setups, opportunities for next week. The euro, with that huge gain last week, is now the strongest currency. It is my favorite long going into next week, so I favor euro long positions. The pound has also increased somewhat from a +2 to a +3, and we saw the raising of interest rates as well last week. The US dollar is still fairly strong at a score of +2, but everything we've just discussed, as I said here, is suggesting that this may continue to come down, and we may see the dollar actually weakening over the next few weeks. The Swiss franc is now completely neutral, having seen outflows last week, and the Japanese yen is bearish to neutral alongside the CAD. Now, you would expect the CAD to actually be gaining under these circumstances, but because of the poor economic performance, traders are not piling in to the Canadian dollar, because the economic data is telling them that the Bank of Canada is going to have to keep very loose monetary policy conditions. You can't tighten into such terrible job numbers. So as a result, traders are choosing to put their money in other currencies, and that's exactly what we should be doing heading into next week. And so with a rating of -1, but a potential weakening of the dollar over the next couple of weeks, the CAD is probably best left out altogether, as it's not a good long, but it's also probably not a good short at this point. And in fact, I wouldn't be surprised to see the CAD remaining neutral for a few weeks. And to the downside here, we have the Australian dollar, which is still fairly weak at -2, and the New Zealand dollar, which has strengthened somewhat and has looked to potentially be bottoming, as the scorecards suggested it would, on the 22nd of January. So to summarize here, something very important to note is if we are forming a top in the dollar index, and we're going to find out over the next few weeks if that's the case, then some of the opportunities won't be as clear cut, because when you get these major turning points in the markets, if that's what's happening, you would expect, for example, the Australian dollar to benefit and the euro, and yet we go into next week with a bias to the upside on EurAusd as a market that I'll be looking to trade. So with that said, let's have a quick look at the individual currencies heading into next week. So starting with the DXY, and I'm looking on the daily chart here. I want to come out of the intraday charts just to get an understanding of what's going on in the bigger picture. You can see that the DXY is still currently structured to the upside, and what we had last week is we had pretty much all down days until NFP. We had a bounce on NFP that actually happens quite a lot. You see that kind of setup. I even tweeted that this would likely be the case because I've seen this so many times in non-farm payrolls week. And so when you get such a steep sell-off like this, this is not usually indicative of a correction. You would expect to see on a correction market kind of doing this and then continuing up like this. So alongside everything we looked at in the scorecards, the technicals here are also suggesting a potential reversal as we see this momentum, we see this almost straight line sell-off in the DXY. Now, when will what we're looking at in the scorecards start to show up in the technicals? Well, that would be on a break below the 94.68. Why? Because what we would have here is a major double top reversal, technically speaking, in the dollar. So the scorecards are warning of this, but the technicals are not yet confirming what we're seeing in the scorecards. And so because of this, in my opinion, any bullish setups in the dollar index itself, despite the fact it has a +2 scoring, is going to be a bit risky next week, because I think what we could very well see is we could see a correction, and we can see this coming up a little bit choppy to the upside, and then we get the continuation down, breaking the 94.68, and then confirming technically the warning signs which are flashing in the scorecards. So because this is still structured to the upside, I do have a target of 97.80, but I often get people confusing this, and this is why you should watch the whole video, because it puts all the pieces of the puzzle together. This is a target based on the uptrend, which is currently intact in the dollar. It does not mean I think every chart is going to go to the target listed. These are the technical targets for the direction of the trends in the markets. And when we go through the video, we make a decision based on which ones we think are going to continue to the targets and which ones we don't want to trade. So those of you who follow the videos on a regular basis will know I don't like to try and pick tops and bottoms. Shorting the DXY up here would be trying to pick the top. But at the same time, what I'm seeing in the scorecards suggests, at the very least, if you're not going to short the DXY and try and pick the top, which I'm not going to do, I want to try and avoid any dollar long positions next week, because the dollar is weakening and potentially reversing and topping out. Next is the euro. Now, here's where it gets interesting, because the euro did actually break a double bottom pattern last week. You can see we came up and we just took out the high over here, and this is, in the bigger picture, a double bottom reversal. Now, one of these two charts is going to fail. Either the euro is going to fail, and this is going to end up being an ABC, and it will continue down like this, and in which case the dollar, which is currently doing this, will form a higher low and it will continue up in its trend. Or the euro will continue to the upside, having confirmed this double bottom, and that is going to, instead of forming a high low over here in the dollar, we'll see next week this will break down if that happens in the euro, and we're going to get that double top reversal in the dollar index. So just as I said, I wouldn't be surprised to see the DXY correcting up first and then breaking lower and breaking that double bottom. I wouldn't be surprised as well to see this forming a bull flag. And if this forms a bull flag, that would be the indication that this is going to continue higher and that we're going to get that reversal in the DXY. So both the DXY and the euro are currently structured to the upside and bullish. But as I said, that's not going to remain long term. One of these is going to break in the other direction. Next is the pound. Now the pound is kind of been moving sideways here. However, I have been bullish on the pound previously, and we were even looking at pound Aussie, pound New Zealand in last week's video. It is currently structured to the upside, and it is forming an inverse head and shoulders. So I am looking further advances, and not only up to the 1.3829, but if we break this level, that would be a confirmation of a much bigger inverse head and shoulders. And especially if we get that double top in the DXY and we start to break down next week, you will see the pound rally. And again, just as this would be a major top in the DXY, this would likely be a major bottom in the pound. Next is the Swiss franc. Now the Swiss franc is currently structured to the downside, and we had a big sell-off recently. It is overall kind of choppy, isn't it? I mean, it's not surprising we have a score of 0 this week, because look how neutral this is. I mean, it's kind of been in a range overall. It's been going up and down, but it's right in the middle of this correction. If the DXY reverses to the downside, I would expect to see a slight strengthening of the Swiss franc, but if a reversal in the DXY kickstarts a risk on appetite, and we're seeing lows in the stock market and we see stocks continue to rally, then the Swiss franc is not going to benefit as much as the euro, as much as the pound, as much as the Australian dollar and the New Zealand. So yes, we may see this rise, but I would prefer to be long the euro, the pound, and perhaps in the next couple of weeks the Aussie and New Zealand as well, if we get a sell-off in the DXY, because the safe haven currencies of the yen and the franc and the dollar should all suffer in a risk-on environment. Next is the yen. Now the Japanese yen started to break to the downside last week. We are overall in a downtrend as well. And again, if we're topping out in the dollar, we're likely going to see the Japanese yen continue down as money moves into a risk appetite. Next is the Canadian dollar. The Canadian dollar is currently structured to the upside just about. However, it's also kind of neutral. You can see pretty much since July, we haven't really gone anywhere. And this is because we're seeing crude oil rallying. So this is supportive of the Canadian dollar, but we're really seeing poor economic data coming out of Canada, which is preventing traders from investing in the Canadian dollar. They're putting their money elsewhere. And as I said, that's what I'll be looking to do next week as well. So I'm going to be leaving the Canadian dollar next week. Next is the Australian dollar. The Australian dollar is still trending to the downside. However, just like we discussed the double top or the potential double top in the DXY, which hasn't yet confirmed, this is potentially a double bottom, but it's not confirmed until we break this. All the time we don't break this high, this is the downtrend. Once we break this high, this is a confirmed reversal. So the Aussie is still kind of weak, and its likely direction is going to be determined by what happens next in the dollar index. And if we go and have a look at iron ore, you can see iron ore is actually starting to trend to the upside. It's technically strong, and this is also going to be supportive of the Australian dollar. And finally, we have the New Zealand dollar. The New Zealand dollar, very similar to the Aussie, is still weak. It's still in a downtrend. However, we may be coming close to a bottom here, as we discussed in the scorecards. Markets don't tend to bottom with such steep momentum, so I wouldn't be surprised to see us come down maybe to the target and then form a double bottom in this area before reversing. So we may have a little bit of weakness still left in the New Zealand, which is why I'm still looking to short next week, and also the Australian dollar. But I wouldn't go too heavy on those shorts if the DXY is reversing. Some patience is going to be required next week in the markets. And I would really recommend next week picking just a couple of the best opportunities you see and not going too crazy until the dollar index once again starts to find direction one way or the other. Okay, so let's have a look at the actual markets heading into next week, see if we can identify where the opportunities are going to be. Starting with crude oil, we had a really strong rally taking out both targets, and we finished the week at the second target last week. The next target to the upside in crude oil is the 95.46, but I have to tell you guys, I am very wary of trading crude oil at these levels. Due to time constraints, I can't go through all of the data that I have with you in the weekly Forex forecast. However, I do scorecard multiple assets over and above just the Forex markets, and it helps me to generate my overall view of the markets. And a few weeks back, I did have a score of +4 in XLE, which is the energy sector of the S&P 500, and it tends to move in line with crude oil. And I tweeted that out about the time that it happened. And that is warning me that we may be seeing a top in crude oil in the next couple of weeks. So looking at this market, you wouldn't think it, because it does look like we're getting more momentum even to the upside. I would not be surprised if we came up a little bit higher, maybe took out the highs, maybe even onto the 95.46. But because of that reading of +4 in XLE about 3 weeks ago, I personally am very wary about trading crude oil to the upside here. I think there are better markets. I think we need to wait for clearer direction, and I won't be trading crude oil anymore to the upside, because I think the downside risk here for the time being is greater than the upside reward. So I'm going to be keeping my eye on crude oil over the next 2 weeks to see if a top materializes, just as the XLE scorecard suggests that it will. So again, I wouldn't want to go in and short this market and try and pick the top, but it does put me off oil long positions for the time being. Next is Euro New Zealand. Now, Euro New Zealand is my favorite market going into next week. Why? Because that's what the scorecards are suggesting. We have really strong momentum to the upside, and so any pullback in this market next week is going to be viewed as an opportunity to look for bullish setups into the next key of resistance, the upside, the 1.7403, and we could very easily be coming up towards target 2 at the 1.7522. So I do like Euro New Zealand heading into next week. Next is EurAusd. Now, EurAusd also has very strong momentum to the upside. It's one of the best scoring pairs going into this week. Any pullback in EurAusd is going to be viewed as an opportunity to look for further advances to the upside into the 1.6320. The next market I have here is Euro Yen. Now, I've highlighted Euro Yen in gold as a market that I'm going to be paying special attention to next week for a very specific reason. Because if in the event the dollar does start to form a double top and we get a weakening of the dollar, you might see the New Zealand and the Aussie catching a bid from that next week. And if that's the case, you will get those corrections in Euro New Zealand, you will get the correction Euro Aussie. But if we get a bigger sell-off in the DXY, you might struggle to really rally in those pairs. So although I want to be long those pairs, Euro Yen provides a really nice addition to those pairs, because if we were to get a risk on move coming in and dollar selling off, by mixing in euro yen with any potential euro New Zealand or euro Aussie longs, you kind of give yourself a little bit of an additional hedge in the scenario that the Aussie and the New Zealand start to strengthen off of the back of any sell-off in the DXY. And again, we haven't had the reversal in the dollar index. We're talking about a potential reversal in the dollar. So if the dollar rallies to the upside, you're still likely to see euro New Zealand and euro Aussie advancing, because the euro tends to outperform the Aussie and the New Zealand when the dollar has some strength to it. Next is euro dollar. So we cover euro dollar every single week. However, this is not one of my favorite markets heading into next week. First of all, because of the scorecards, both the dollar and the euro are scored as being strong. And second, even if we are going to continue in euro dollar, I wouldn't be surprised to first of all see a correction take place. So we may just spend next week correcting in euro dollar, and then maybe we rally in the following weeks. So because of that, I would much rather trade euro New Zealand, euro Aussie, and even euro yen next week, and euro dollar will come back onto my watch list in terms of one of my favorite pairs if we actually start to see the dollar index reverse into the downside. Next is pound New Zealand. Pound New Zealand was a market I was looking to the upside last week. We did have a correction, and for anybody not already involved, any pullback in this market next week would be viewed as an opportunity to look for bullish setups into the 2.0611. I do favour euro New Zealand, euro Aussie and euro yen, however, over the pound pairs, because the euro is actually slightly stronger than the pound, even though they both score +3. Next is pound Aussie. Pound Aussie was a market I highlighted to the upside last week. We did pull back, and I suggested in last week's video any pullback was an opportunity to look for further advances. We have started to advance, so any pullback, once again, for anybody not involved, is simply another opportunity to look for bullish setups into the 1.9330. Now again, with pound New Zealand and pound Aussie, you have a similar potential issue as you do with euro New Zealand, euro Aussie, which is that if you get a real sell-off in the dollar and you start to see Aussie and New Zealand catching a bid, you might see pound and New Zealand struggle to go to the upside. They won't necessarily reverse to the downside very strongly, because they're both kind of strong currencies in that case. So pound yen would be a good market to mix into that, because you would see pound yen rallying to the upside in a strong risk on move. So if you have a look at pound yen, this is a market that we've had a big bull flag and we've started to break to the upside. Any pullback in pound yen next week is simply viewed as an opportunity to look for bullish setups into the 158.20. And finally, we have the dollar pairs. Now, New Zealand dollar and Aussie dollar are both still structured to the downside, and we do technically still have a strong dollar because it's scoring a +2 on the scoring system, and also it has not reversed to the downside. It's still in an uptrend. The uptrend in the dollar is still intact. So New Zealand dollar to the downside does go on my watch list, but this would really be in the event of the dollar failing to reverse lower and even break into new highs. So in that case, any pullback would be viewed as an opportunity to look to short once again. First of all into the lows, and then onto the 0.6491. And once we finish the next two charts, I will just summarize my plan in case this is confusing to anybody, to let you know exactly how I'm looking to trade those next week. So next is Aussie dollar. So Aussie dollar also sold off to the downside on non-farm payrolls, and both Aussie dollar and New Zealand dollar were inside weeks. In other words, they just kind of corrected and they went nowhere. So going into this week, it is structured to the downside and the dollar still scores strongly. So any pullback in this market would be viewed as an opportunity to look for bearish reversals. Down first of all to the lows and then onto the 0.6933. However, again, it's not highlighted as one of my best or favorite pairs going into next week. Why? Because these markets up here score more strongly. And finally, we have US dollar Japanese yen. Now, US dollar Japanese yen is highlighted here for a specific reason, because US dollar Japanese yen can often be a very good market to pivot to if you're getting a trend reversal, say in the DXY, because the dollar is still fairly strong at +2 and it's still technically structured to the upside. So in the event that the dollar strengthens, because the yen is quite weak, we will likely see the US dollar appreciating against the Japanese yen. But also, if we have a big sell-off in the dollar and we get a risk-on mentality coming into the markets, you can also still see US dollar yen rising to the upside, because the yen is more of a safe haven asset. So in a risk-on environment, you actually see US dollar yen moving to the upside. And conversely, if you have a deflationary shock, you see US dollar yen selling off. So US dollar yen is a really important chart I'm going to be keeping an eye on next week, because if I take, for example, Euro New Zealand to the upside, or perhaps I take Euro Aussie to the upside, I would also want to keep an eye on US dollar yen and maybe mix that in with those trades, because in the event that Euro New Zealand, Euro Aussie just kind of correct, we could still see US dollar yen moving to the upside. Does that make sense? So by mixing in overall, say Euro New Zealand, Euro Aussie, and US dollar Japanese yen, you provide yourself some sort of a hedge and increase the chances of catching a nice move. So those are the pairs I like in the Forex markets heading into next week, and that is how I'll personally be looking to trade them. I'll also put some updates on Twitter throughout the week in case any of that information changes. And finally, I do think it's a good week to just pick only the best setups that you see. I'll be looking personally just to take a couple of trades next week, because when the dollar index has no clear direction, opportunities tend to dry up briefly. And when the dollar index starts to find clear direction one way or the other, you get more opportunities coming into the markets. So wrapping up the video with stocks, gold, silver, and Bitcoin. In last week's video, I did note that the SPX was still trending to the downside, but the targets that we took out previously, I believed, were going to form a low in the market. We have formed the low, and now we've reversed to the upside. So going into this week, I do have a bullish bias on SPX. Any pullback would be viewed as an opportunity to look for further advances into the 4733.33. I still wouldn't be naked long on stocks because volatility is still high, so I would prefer to be long in a long-short portfolio or net long and still have some hedges in place just in case. But watch out as well for that dollar index reversal, because if we get that reversing to the downside with a double top next week, this is going to lift and add to any rally in stock prices. Next is the Nasdaq. The Nasdaq has also formed a low in this area and we started to break to the upside. I have the same view on all the stock markets here, that I am bullish now on the Nasdaq, looking for a move into the 15,508.40, but I'll still have some hedges in place because of the level of volatility we're seeing in the markets. So the VIX, the Vixen, etc. are still elevated, which brings in some downside risk to the markets. So bullish but hedged is my preferred position here in stocks. Next is the Dow Jones. The Dow Jones has also reversed to the upside, and any pullback here is currently viewed as an opportunity to look for bullish setups into the 36,060.27. Next is the Russell. Now the Russell is an interesting one because this was the one market that really broke lower and started to make lower lows here in some sort of a significant way. However, the 2107.08, which was the key level I identified to the downside, so if the Russell breaks here, be careful. This is a warning. We could be seeing something deeper in stocks. This once again becomes significant to the upside. So the next target to the upside is the 2107.8. And once we trade into this level, if we trade into this level, what the Russell does next here will be indicative of the next moves in the stock market. If the Russell breaks back through here, especially with momentum, this is going to be a very bullish sign, and it's going to add to the idea that we've seen a low in stocks. So I am bullish on the Russell into the 2107.08. And if we do come back and test this level, keep an eye on this market, because as I've said in previous videos, the Russell tends to lead other stock indexes. And finally, we have the Nifty. Now, the Nifty is actually structured to the upside, and it has been structured to the upside in previous videos. And I said I am overall bullish on the Nifty, but just be careful because of what we're seeing in US stocks. This is likely to weigh on the Nifty. And now we've started to bottom in the US stocks, we are also starting to rally in the Nifty. So any pullback in the Nifty is viewed as an opportunity to look for bullish setups into the 18,208.30. So finishing up with gold, silver, and Bitcoin. Gold is still structured to the downside, and I noted in previous videos we had this big sell-off, we had a failed breakout to the upside, and we are forming this bear flag. Now, any continued decline in gold would more than likely see the dollar rising to the upside, and this causing the decline in gold. So perhaps what we get is, perhaps in the dollar we've sold off like this, perhaps we get a correction in the dollar, and as that happens we come down in gold 1759.44, and then perhaps we bounce from these areas, and then we get the double top in the DXY. So just like with Aussie dollar and New Zealand dollar, I will keep an eye on gold, but it's not one of my favorite markets going into next week. There's a very good chance I don't trade any of the dollar pairs next week, purely because the dollar doesn't have real clear direction. It could be reversing, but it's still in an uptrend. Hence why I prefer Euro New Zealand to the upside, Euro Aussie to the upside, Euro yen, even US dollar, Japanese yen That's pretty much the only dollar pair I quite like going into next week. So overall, patience required on these markets, but I would be looking, if you're looking to trade gold, because we cover it every single week, look for a break lower down in this area, a breakout of this bear flag, and any correction in this area would be the opportunity to go short if in fact you're starting to see the dollar rallying. Not one of my favorite markets going into next week, however. Next is silver. Silver is exactly the same. You can see silver is still structured to the downside, and the target is 21.47. And again, because of the dollar index, because it's still in an uptrend but may be reversing, I'm not looking at this as a favorite market heading into next week. I wouldn't mind just having some patience and waiting for the next clear direction in the dollar before trading gold and silver. So any pullback in silver would be viewed as an opportunity to look for bearish reversals as it currently stands, but you would need to see the dollar rallying in order for this setup to materialize, which the dollar has not yet done. And in that scenario, any pullback would be viewed as an opportunity into the 21.47. If the dollar reverses to the downside next week, I will not be looking at shorting gold or silver. I would, in that scenario, if we get the double top in the dollar, be anticipating another run to new highs and another attempted breakout to the upside in these markets. And last but not least, we have Bitcoin. Bitcoin has actually broken to the upside and has turned bullish. So very simply put, going into this week, any pullback in Bitcoin, and this is very interesting as well because Bitcoin has proven itself not to be a hedge against inflation, but in fact a speculative asset. And this is suggesting more of a risk-on mentality when we see Bitcoin starting to reverse or trend to the upside. So any pullback in this market would be viewed as an opportunity to look for bullish setups into the 45,650. I have noticed a couple of times in the past that Bitcoin tends to even lead the dollar a little bit. And so maybe time will tell whether this is another indication that the recent run in the dollar is coming towards an end. So that is it for me for this week, guys. Just to summarize, the US dollar is lacking clear direction, and there are many indications to suggest that it might even be topping out. As a result, I don't favor the dollar pairs this week. I favor the euro pairs to the upside, primarily Euro New Zealand, Euro Aussie. I also like pound New Zealand and pound Aussie to the upside. And apart from those markets, I would also like to mix in a couple of risk on pairs such as Euro Yen, Pound Yen, and even US Dollar Yen to broaden out my trading plan a bit next week. So I hope you all enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.